Happy Friday, ladies and gentlemen. Welcome in to the Friday edition of the Trader Nerds, all you nerds. So welcome in. Hope you're ready for a great weekend. Now, keep in mind, Monday is the new national holiday of Juneteenth. Now, cool thing about that is we are futures spreadsheets crashing left and right. I give up for that. Well, just shut it down, Ken. Just relax. The market's in good hands. Market's up, all doing well. So Juneteenth, all those goofy equity traders are like, man, we got to wait till Tuesday to trade. Not for us, people. You and I are futures traders, futures options, and the futures markets are open on Monday, like, at least through 1 o'clock. So we'll probably do our regular session on Monday. So a lot of the times on those holidays that the futures are open, and I'll have to check for sure, but most of the time they trade through 1 o'clock Eastern, and then they open back up at 6 p.m. Eastern. So, normally we do our trading around the lunchtime hour. So, that's the cool thing about futures traders, especially with the acknowledgement that you and I are addicts with trading, right? We are addicted to it. We love the markets. I'm engaged in the study of financial markets and the behaviors of individuals and institutions around those markets. So that's what I do. That's my passion. So you are here because you're an addict too, and we love the markets, right? And so we never take a day off. I mean, I'm watching markets on Sunday. I'm watching markets on holidays when the futures are trading. It's just kind of cool that we don't have to take as much holidays as the equity traders. So really, really cool. So market is up 0.62%. Now, here's the thing. It may very well be down before the end of the day. It is a mover. But if you'll look, and this is why I always highlight the opening 15-minute range. So you see the range, we're in that range. So we call this an inside day. We call this a who's photobombing me? Do y'all see JoJo? Come here, JoJo. That's JoJo. My son JoJo. JoJo, say hey to everybody.
Hey.
I just got them a McDonald's hamburger. And they wanted the Happy Meal. But I'm like, y'all, we ain't got no money to buy no Happy Meal right now. We're in a recession, ain't we, JoJo? Huh?
Why do we don't have money?
We just broke, JoJo. We just broke. Huh?
No, we're not.
we broke ass po, Joe. So anyway, so I didn't get them a Happy Meal. I just got them a McDonald's hamburger. Is that hamburger good? Enjoy it, son. You don't get to eat again until Monday. No, I'm just joking. It's not that bad. All right, but so what was I talking about? So this is what we call an inside day. 80% of days are range days, right? And we call this a range. Now the range may be big, right? Sometimes it swings pretty high up. Overnight high seems to be the ceiling. Overnight low didn't help us, didn't stop us much, but we're in a pretty tight range, all things considered. See what the volume is, 4771. So volume's a little weak on Friday. We got everybody going to the Hamptons over the weekend. So, just a regular old market. Let's say the AD, just a kind of a Paisley, little 181. So nothing to see there. Let's look at our volume profile. Okay, no surprise at all that we are seeing a little bit of consolidation around the 80% line, because this is where the market is deciding whether we're going to be fairly priced or we're going to be oversold. So you can see clearly, y'all, there is a battle at this 80% line. When did we draw this 80% line? We drew this on June 1st. How did we know that there'd be capitulation and whatever going on here? Well, we didn't, but we've learned that we can always tell that these levels normally work. So we're trying to figure out if we're going to stay oversold today or if we're going to go into being fairly priced. All right. So anyone got a question about this chart? All right. Anyone got a question about this chart? Let me share this chart with you for those of y'all that don't have it. That might be good. Let's see, share grid. And I think it should have all the big green monster if y'all didn't draw it. Should have it on there for you. Point of control. Let's see what the point of control is. Point of control. Let's go back to it. I'm gonna turn this fan on, y'all. If it's too loud, y'all tell me. But I am hot. Oh, I just got out of the gym. My goodness. Point of control. Yeah, 4,044 right there. And remember, our assumption for the coming days is probably a return here, right? Go back here, fill in those things, fill in this. And we're never surprised to see a return to the point of control. And you see, there's nothing close to becoming the new point of control. I mean, unless we stay a long time over here. But, you know, we're never surprised at that. So this is a very bullish short-term chart, which also coincides with our linear regression. Let's take a linear regression, which is just big. Here's what I call bear market. Here's what I call recession. I fully believe we are in recession. We just don't know it. Those of us that are buying gas and are buying McDonald's hamburgers, when I tell my kids you can't have a Happy Meal, okay, because it's $2 extra than rather just getting a hamburger and the fries, we are in a recession. So here we go, y'all. I mean, we go outside of the linear regression and we pop right back into it. Our expectations coincide with what we see on the other chart, is that we'll probably, now we can do it like this, right? We can certainly walk our way up, but we anticipate that we're going to see some walk up at least to the center there, and you know, up and down movement, probably going back up to the top. You know, we may still hit that 4280. We'll see. We'd have to have a big bull rally. Can you imagine if we went from here to this on the 27th? So that gives us 10 days. Can you imagine going that far? You know what everybody would say, right? They'd say what they said here. Remember when Bobby called a bear market and then this happened? Oh, it's over. This is all over. And if we did this to this, they would say the exact same thing. They would say, oh, it's over. Well, you know, wouldn't that was not too rough. Market down 23% on the year. That wasn't nothing. We're over this. And then they would anticipate that. But that ain't happening. This ain't happening. This ain't happening. We have much farther to go. All right, so there's my doom and gloom scenario. At the same time, I don't believe that we'll have any crashes. I believe that the probably the bigger chance of having a crash was when we were just a rampant bull market. We are no longer in that market. We're in a very, very controlled downward bear market. Then we will have rip your face off rallies to the upside and very controlled downside motion. All right, but who cares? I mean, you know, we don't care. I mean, it is what it is. We don't care what market movement is. We just trade what's in front of us. And what's in front of us today is really, really good, right? So let's go ahead and get our stuff started. Let's get with the IRA, see how the IRA is doing today. So it is the 17th. And see what our net lick is today. It is 98,888.63. JoJo, tell them what you're going to be when you grow up.
I'm a trader.
A trader. Anything else?
And the police officer.
He's going to be a trader and a police officer. Come here, JoJo. Y'all tell me this is not the most handsome kid you've ever seen on the planet. JoJo, tell them how old you are.
7.
He's 7. Tell them where we're going in 2 weeks, JoJo.
I don't know what it's called. Tanner's Beach.
Yeah, we're going to the beach. All right, go play, JoJo. He wants to be a trader when he grows up next week, just like your dad. All right, so we got 99,888. So we're up $1,300 from yesterday. So let's go check our Greekies. See what our Greeks are. Now, he's a handsome little fella. A little smile will just make you, but man, he has some breakdowns. Oh, yesterday was one of them, crying all over the place. All right, so here we go. So our deltas are 80.07. So we're a little bullish, which would coincide with our assumption, right? Our market assumption. And we're basically delta neutral. We take 0.0015 times your net lick. We don't want to be higher than that, and we're not. We're 80.07. Our theta is a very robust 277.42. So we're at 0.28. If you're new, we target theta between 0.1% and 1%. I probably should change that 0.1% to 0.5% is what we're looking at. So we've got plenty of theta. A theta is a measure of risk as well. We all think, oh man, the more theta we can get. No, you don't want maximum theta because theta is also a risk metric. That's why it's one of the most common things that are important things that I look at. Then our buying power usage is, come on, Bob. Buying power usage is 44,679. It's going to be a little high, right? 44,679. So our buying power is at 45%. So if the VIX is between 30 and 40, we should be at 40% max. What is the VIX? And if you've got this chart with me, here's the cool little chart that shows us where VIX is. VIX is over 30. So we should be no more than what, 40% of our buying power being used. So we're at 45. So what it's telling me is, hey, Bob, you really don't need to put on additional trades. You really do not need to incur additional risk. So everybody's with me on that, right? There's no need to put something on because you've got enough theta. You don't need a new trade. You're using more buying power than you should. So why add more risk? Because here's where people get into trouble. Remember, we always say, hey, we're going to put one on every day, a new trade, and we're going to take one off. Well, that's all and good. But what happens when your buying power gets up to 50, 60, 70, 80, 90, 100%? And then you're like, oh, crap, right? So there's no need for me to put on additional risk, especially since my theta is a very hefty 0.2%. So in this particular account, we're not putting on a new trade today. And I want y'all to realize that why the account states I don't need it because I'm using too much buying power. Everybody with me on that? Any questions and comments or saying, oh, Bob, you're wrong, though. This is a great time putting in, you know. Let the metrics speak to you. Let these speak to you. This is how we guide the ship. This is how we don't become the Titanic. We don't want to sink our ship. Okay. Can you please post the Greek ratios? Ed, are you talking about these here where I've got all these hidden, or what are you talking about? Yeah, okay, let me take them here. Let's see, A, B, C, D, E, F, G, H, I, J, K, L, delta to theta. If you're using SPX delta, the normal range is between negative 0.5 to plus 0.5. And I really don't look at that, y'all. I just don't, but I'll let you see it. Let's see what else we got here. Delta to Vega ratio, SPY weighted delta of 1 to 2 of your Vega, right? So if your delta is negative 100, or if your Vega is negative 200, you would want delta of negative 100. So it's a negative 1 to negative 2 ratio, right? You want delta to be half of your Vega to the negative side. Let's see what else we got there. So that's 2 ratios. TV ratio, that is theta to Vega ratio, is ideal ratio of 0.2 or above. And what I found, Ed, even though I've got all of these ratios in here, is that I just don't need them, you know, and that's why I quit even tracking Vega. Just don't need them. If you'll keep your deltas in check, your theta in check, and your buying power, really, that's all you got. That's all you need. Let me hide those back. But I don't mind talking about them from time to time. Hey, y'all quit crying. Jay's gonna come in there and beat some butt. Y'all see? Sweet boy, though. Now he's screaming at the top of his lungs. All right, so let's go to the other account. Let's see how we're doing over there. Let's go over here, because this is the one where we were like using 100% buying power. Oh, behave. Oh, wait a minute. 616, 16, 22, 6, 17 comes after 16, Bob. Come on, man. Let's see what the net leak in this one is. Crimson is 25, 952, 957.24. we're up a little bit, $743 there today. So since we kept keeping our little metrics, we're down $1,500 net lick wise in the account, right? So let's go to our Greeks and Riches. What, baby?
Dad's watching Puppy Playtime and he's not supposed to.
What? Come here and tell everybody. He's doing what? He's watching something he's not supposed to be watching. That's a little Beth right here. Spitting image, a little Beth. All right, go over here and turn it off, okay? I'll see you in a little bit. All right. She's a cute little thing. That's my little one. All right, so what were we doing? Oh, so let's put our little Greekies in. And our Greekies are, for this account, Crimson 18.52. Yay, I like that. That's almost delta neutral, 18.52. And our theta is a very robust 164.47. So it's a measure that you've got enough decay coming into your account, and it's also a measure of risk, right? So our risk is fine. And our buying power usage, we were at 94% yesterday. Oh, behave. Today we're at 27.67. 27.67. 27.67. So we are at 80% buying power. We're delta neutral and we're over on our buying power. Right? So that's why we don't put on trades. I can't put on a trade today. I just can't. I just can't put on a trade. Now, I could put on a bearish 111 or 112 to get my deltas a little slightly negative, and it would probably cost me zero buying power. Okay, but I don't want to do that. Why? Because what's my market assumption? My market assumption is we're about to get a rip your face off rally. And if I do that, I selling those calls there, I'm just going to get popped out of them. So why do it? Remember? And it was great having calls on the last few days, but we got out all of those. So I think we're fine. I think we're fine. So no need to put on additional risk. Why would I want to take on risk? And what I think will happen is over the coming days that we'll get back into our 30 to 40% usage where we should be. I just got to let time pass. I just don't want to, I don't think that they're going to force me to close anything. And that's why I'm not putting on additional risk. So you want to blow up an account, put on additional risk. You want to blow them up, keep doing it. There comes a time when these numbers have to speak to you. I've got plenty of theta. Why? There's no need in putting this on. Okay. So now let's see if there's anything that we could close. And I'm betting that no, there's not. But let's just see. See what we got going on here, Bob. Oh, Bob, oh, Bob. Negative 209. Negative 73, negative 342, negative. Well, hello. And that's our futures, right? I told you, you're going to hate futures because if you watch them, you go, crap, if I didn't have those on today, and you said the market's going up, won't you take the profits on those? Well, I've still got positive delta, so I don't have to do that, right? If I really believe my convictions and what I think the market direction is going to do, yeah, I could take one or two of those on, get additionally long, take my profits on some of these, and I could close one, I guess. Let's see what would happen if I close one. Close, create closing order. That would make me long of 50 extra deltas, right? So let's see what the buying power thing would do here. Close one of those. See, it's going to be a buying power effect of $1,568 by closing one of those. So it's basically saying, hey, Bob, you'd be using more buying power by closing one of those options. So it's basically telling me that the risk management team at Thinkorswim is telling me, Bob, you really don't need to close that one. Okay, I'll listen to you. I'll listen to you. So that's the only thing positive on the, wait a minute. Oh, hello. We got something up here, up 15%. I could take off a little bit of risk. But, by the time I close it, this is going to give me 17% return. And as we found the other day, by the time I close it, commissions will eat up this $10 in profit, and it'll probably be a slight loser. So really can't close that one. 49, 21, 80. Yeah, nothing I can do. Nothing I can do. but just sit back, relax, and drink a Yoo-hoo, which is the greatest little chocolate drink known to me. All right, so let's go to the other camp. Let's go to the Bobby Beth camp. Over here, is there anything we can take off here? Negative 407 plus 21. Well, by the time I take it off, though, probably wouldn't make anything there. Negative 336, negative 417, negative. My futures. I've lost 625 today, but I am up 1,400. Now, again, you could do the same thing, right? What if I close those? What if we close one? Let's see what will happen to my buying power. I mean, basically telling you whether you need to close one or not. Well, Bob, if you close one, we're going to charge you $1,960 in buying power. Thinkorswim is telling me, their risk management team is saying, do not close it, you moron. You need that in your account. And if you do, we're going to punish you by taking more of your buying power. So everything's a loser. There's nothing to close. There's nothing to close. There's nothing to do. As much as you and I are addicts, as much as you and I want to put on new trades, as much as blah, 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 we just can't do it. The metrics that you and I follow are speaking volumes. And they're telling you, don't take additional risk. Don't blow your account out, little D. You're going to be just fine. All right, so let's go over here. I want to show you one thing on this account. Then we'll go to the Analyze tab and just check out some of our trades. So let's go here. And I wanted to show you here, I also have some futures, right? I am, where are we at? Full futures. Show me how. Yeah, I'm short one future over here. So my deltas are 53. I'm willing to take 53 deltas going into the next week, thinking that we are a bit on the bullish side for the coming week. And let's look at our options now, because I wanted to show you this, because I hadn't closed everything in this account like I do the other one. Sometimes I forget, right? And so I wanted to show you that I've got some stuff that is expiring today. And this is where you start going, oh no, Bobby, what are you going to do, right? What are you going to do? Well, what am I going to do, right? This is a, all of this stuff will expire out of the money. So there's nothing really that I need to do, right? The spread here was a bullish spread. Well, that was kind of goofy, right? So it will expire worthless, right? That spread will expire worthless. And then this little puppy, -2 at 450, -2 calls 45.40. Well, that's expiring out of the money too. Yeah, we're at 36.81. Ain't no way we're getting up to 45.41. So those -2 calls should expire fully profitable. So nothing for me to do on those. Okay, but I just want to see you. A lot of people get freaked out. Oh, I got something coming to expiry. What's going to happen? Well, nothing in that case. Just let them go. All right. Now, with that being said, let's look at some of our trades. Let's do, I think the other day we looked at the Crimson account. Let's look at the IRA account today. So we've got everything divided into groups. Make sure you put yours into groups, right? You're grouping your trades. So let's come over to Analyze tab. Make sure you got MES over here. And I do one expiration. And then we'll look at each and individual trade and just see, how bad are we doing? So I go high simulations, single symbol here, and then it says all groups. So this is all of my groups on a single expiration, right? So here's where the current market is, blah, 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 blah. You see the purple line is the T0 line, which means that is time today. And look over here, y'all, look over here. You see the purple number over there is, I'm down $2,192 on my trades that expire in this first expiration. But if we stay here, or even here, look at my profit, what it's going to be on July 16th. So all of my trades in this first expiration look totally good. But then what you want to do is look at your actual trees in your forest, right? We look at the forest first, and then let's look at the trees in the forest, see how those look. So this is a bullish trade. So it's down 542 today. will be up 122.50. Here's where the short strike is. The short option, right? And I guess if this is a bull, that means I've got something on the call side up here. Yeah, I've got call side up here. So this trade is perfectly fine. Everybody sees that, right? And there's, even though I'm down $545, in my opinion, this trade is perfectly safe. Let's go to the other one. We'll just go quickly through them so you know what's going on. Oh, here's one, y'all, that we really like. Look at this. We're up 50 cents today. If we stay here, we're going to be up 107.50. But here's where we really want to be. But we don't want to be here today. We move that a couple of days. There we go. So we're up 16.75 or so. And as time goes on, the T0 line goes up. Watch. You see that? As I go every day, and it just gets more and more profitable. And then you go, if you have a 5% drop, well, good, because I'll be at $220. So that's the cool thing about these 111 and 112 trades. So right now, it's not really mature, but it's starting to mature. So 1114, 112.28. Look at there. We are in the profit tent. We have gone past the put debit spread, and we are just in the tent, and we're waiting for this thing again, just like the rest of them, to mature. 112.22. This one has matured a little bit more. It's almost getting profitable, right? We need time to pass, and we should get some good theta decay over the weekend, hopefully. So this one just has gone past the put debit spread. That one's fine. 112.23. That one's fine. You see, they're almost getting profitable. See this? They're almost at this current level getting profitable. 112.23, 112.31. Look at this. We haven't even gone to the tent yet. Just go through them quickly. You know, look at them. Hey, we're in the tent. We're down, but we're in a really good place to make $627 if we stay around this area. Futures. We're going to look at futures. 112.27 looks similar. 112.24 similar. 112.26 similar. We're in the tent of a bunch of these. 111.3. Okay. 112.30. Ken says most theta will be taken out this afternoon, which will be good, right? Take it out, baby. Take it out and give me some money. 112.21 is gone. Unallocated. Nothing should be unallocated. So let's see. What did it say? You're plus 230 delta, plus 142 theta, and negative 425 theta, and low buying power usage in a PM account. Deltas and betas are always like these, right? So you say you're always positive delta, negative vega. Since you said they should both be negative in a 1-2 ratio, I don't know how to balance them to the correct ratio. Well, I say that they should always be negative. Now that's if you're going by the Tastyworks, you know, their ratio, which is -1, -2. Now you saw, Ed, that I've taken that out. I hadn't taken it out because occasionally I might want to look at it, but I don't look at it enough. That's not what I'm going by. I would rather you say, here's what I'd rather you say. I'd rather you say, look, Bob, my account is $100,000. Okay? Or whatever your account size is. So I'd rather you say your account size is $100,000. And I want you to take whatever your account size is. You don't have to share it with me. But times 0.0015. Okay? So this is the number that I'm using. Now, who am I? Y'all have seen I'm the worst trader on the planet. I do things at the wrong time. I look and I've got ADHD, I got ADD, I'm eat up with the diabetes. I got all kinds of manic depressive. I'm probably bipolar. I got all this garbage going on, right? So I'm not the most stable person. So the fact that anybody would be following anything that I say, you know, buyer beware, so to speak, because I haven't got a clue what I'm doing. I'm the worst trader on the planet. But in my current trading, I don't want my deltas to be greater than or less than 0.0015 times my account balance. So, you know, if you are above 0.0015 times account balance, I would say, now don't listen to me, but it's just my opinion, that you're too bullish. Now, if that 400 or whatever 200 deltas that you shared with me, if that's not greater than 0.0015, you're fine with having those positive deltas. There's no problem with that. Especially, Ed, if you kind of buy into what we're saying, is that, hey, we're kind of bullish for the coming days, right? We kind of think we're going to go up here. Now, keep in mind, we can go down here before we go down here. But, you know, it's not necessarily bad to have those. I'm below that. Oh, good. Well, if you're below the 0.0015, I mean, I wouldn't worry about it. Because what you're doing is you're doing the 111s and 112s. You got your delta in check, your theta's in check. Is your theta greater than 0.1% of your account and less than 1%? How much theta per 100,000? Okay, let's do that too. 100,000. So if it's 1%, the greatest amount you should have is $1,000, right? That's the greatest amount you should have. That's 1% on $1,000 account. It's on a $100,000 account. So the less you should have, 100 times point, what is it? 0.001 is $100. So on a $100,000 account, you should have a minimum theta of 100 and a maximum theta. Now, and I'm pushing that on the maximum. You know, I kind of don't like going above, you know, 0.5% or 0.75%, but I would never go above 1%. 1,000. So a $100,000 account, your theta should be between 100 to 1,000. Are you within that category too, Ed? If you're within that kind of category, I think you're fine. I think you're fine. Isn't that cool? Again, I don't know anything, so take it with a grain of salt. But it's pretty exciting, isn't it? When you start going, oh wow, Bob. So let's look at our metrics. What are our metrics? The most significant metrics that you and I follow is going to be theta percentage. We don't want that to be too much, but we don't want it to be too less either, because if it's too less, you know, you're not making money, right? Theta is how we as option sellers make money, but it's also a measure of risk. Right? The second thing we look at is our buying power. And we've got very nicely defined percentages of buying power. Well, Bobby, I'm above that. I got it. You know, so that's just telling me when possible, close the trade. When possible, and it's also telling me, hey, Tubby, don't put on new trades. So I didn't put on a new trade yesterday. I didn't put on a new trade today because I'm waiting for theta to come in. I'm waiting for volatility to go down. Right? Why do I think volatility is going to go down? Because we had this big down move in the market and volatility went up. It made my buying power spike. It made my theta spike. It made everything spike. And then, so metric 1, metric 2, metric 3. We keep our deltas in check. We keep our theta in check. We keep our buying power in check. You have an opportunity to make money. You have an opportunity to not blow out your account. Now, you can change these metrics anything you want to. You can go in here and change the formula. I've put in 0.0015. If you're on the low end of the ranges, you can position your you can add positions. Exactly. Yeah, man. If you're under 40% buying power usage right now, fixed 40%. Yeah, and you want to increase that, absolutely. You can put on additional risk. Certainly can. Or you can be strategic with the risk that you're putting on. So let's say that today's going to be a big day up in the market. Is that the ideal time to put on a 111 or 112? No, it's just not. So maybe put one on a down day if you're kind of close to your buying power usage. If this is sufficient and this is okay, and you're kind of getting up there to close to 40%, be selective on your entries. Be a little selective on your entries. So as much as we try to make this into a science, there's still a lot of art to it. And I guess that's why we'll never be able to 100% automate the strategy. strategy is just pretty simple. Let's just keep it simple. Theta, delta, buying power. Theta, delta, buying power. What about my Vega? I'm worried about my Vega. Don't worry about your Vega. If you keep this, and this in line as an option seller, Vega will take care of itself. Vega will take care of itself. So why don't we look and see how we're doing comparatively to the markets? It's kind of neat to look every time, right? So the markets are down. Let's see, let's go to data, refresh all. So since we started doing this, the markets are down 17.69%. We're down 2.75%. That's kind of cool, right? Now we don't like being down at all, but if we look, let's say this is the IRA. Let's go here, go to analyze. Let's go single symbol. We'll go to all groups. We'll go to four expirations. Four expirations. I look pretty darn good, y'all. Look at this. If we stay here through September the 30th, we're going to be up $8,011. Yay. What if the market goes down 5%? Well, we'll be down 5,000 today. But if we can just hang in there until July the 30th, we'll be up $11,000. Isn't that cool? It's all cool, right? So we go up a little bit and you're like, yeah, we're okay. We'll not make as much. So even though we got bullish deltas, looks like we're better to the downside. Isn't that cool? So let's look at one other thing. Let's look at the other account, see how we're doing over there. Relative performance to the market. And I don't know that I've given you this spreadsheet that has this. Do y'all want that? Before you go, I have a question as to your pronounced ask, a proper Anglo-Saxon word for ask. Oh, give me that, Ken. Talk to us.
Well, the question involves one of the spreadsheets that you shared a couple of days ago, and I can't figure out what one of the indicators is. So I was just, before you go, maybe you can bring up that interday chart, the two-paned interday chart.
Okay.
And I got a question about the chart to the right.
Okay.
So that's interrupting what you're doing, so we'll do it later.
Okay, well, we'll do it next. Well, let me just look at our performance here. So in the margin account, so the SP 500 is down 15%, and we're down 5%. All right, so let's bring up that chart, Ken, so we can look at it here. Chart, side by side. Hopefully I can explain it. Okay, here we go. Hey guys, be quiet. Dad's in session.
All right, what it is I've gone through and I understand stuff in the top, but down here in the, I'm looking at my chart. Oh, sorry. There you go. You're down there at the bottom, you got the white candles underneath the VIX, the ADR. What are those trend lines going horizontal? What draws those, or what do they represent?
Okay, so you're talking about this little line right here, right?
Yes, sir.
Okay, I believe, Ken, that those represent where there is a gap. So let's see, yeah. See between
yeah,
this
not the
and
little ones. I'm talking about the big ones, the big dash lines.
yeah, the big dash line, that's a gap. That's a gap.
So these little, the little dinky ones I've just now seen, that's gaps.
Yes, this is telling you that there is a gap between this candle, the end of this candle, and the beginning of this candle.
Well, cool. That's not the one. I didn't even notice those until you showed me.
Now the cool thing about it, now here's the little thing, the little box, that indicates that is the low of the day. See that? So it keeps going lower. So it's a new low, new low, new low, new low, new low, new low, new low. And then if the box is green, that's telling you that candle is a new high, a new high, a new high, new high. And then these,
that is cool.
Yeah, and then these are all gaps.
Okay.
Isn't that
now
cool?
Yeah, it is. But that solid and dashed horizontal lines that go across the screen, where do they come from?
Okay, so this is just the 50 and, having a line every like 50 and 100. So 100, 150, 200, 250, just to kind of give you some, just some indication.
It reminded me of the big green monster. So I was.
Oh, okay. Yeah.
Yeah, that's why. What indicator throws those up?
Now this was some dude in Tony's trading room in Theo Trade came up with this, and I was like, oh man, that is the coolest thing. And I wish I could remember who did it. But he shared this indicator with us, and so I share it with y'all. He shared it with our entire group. So, but it's very helpful, you know, because remember the AD. Now, here's what Tony's theory is: AD leads the market, right? So AD going up, the market should go up. AD starts going down, okay, market should follow. So he puts a lot of emphasis on AD, and I love looking at it. I love looking at the AD every day. And the cool thing about this is it also tells you your VIX. Isn't that cool? It tells you what the AD is, and then it tells you what the last four. Now, here's kind of neat, Ken. If I don't know if you've noticed this, the current bar is bullish on the AD. The one before it was bullish. The one before that was bullish, and the one before that was bullish. So it tells you if what the current bar is, if it's bullish or bearish, and it tells you what the three previous ones were as well.
Oh,
And
this is fantastic.
Yeah, so and I should have gone through this, I guess, more. So this one you see is above that one, so that tells you that's a bullish candle. This one was above that candle, that was bullish. This one was above that one, which was bullish. And then finally here, this one is above that one, which was bullish. So you'll see sometimes it'll be green, red, red, green, you know, so that kind of tells you. So you can kind of look at this without looking at the candles and see, well, hey, the last four candles have been bullish.
Yeah, I like gaps. Gaps are remarkable and they're very important.
Yeah. And let's make sure we know everything on this thing. So everybody knows my blue line is my overnight high. And I always look at what it did overnight because oftentimes the overnight high will serve as support or resistance. Here it was resistance, right? We'll see resistance. Oh, that's beautiful, son. That's a beach picture. Look at JoJo's beach picture. I think that's beautiful, son. Oh, you're already doing the beach. All right, so that's overnight high. And then we also look at the overnight low, which is this purple one. Now, the little white line here, this is the cash open. All right, so this is where the market opens. See it right there at 9:30 Eastern time. This is where we open. This is what's called an hourly mid-band. It just kind of tells from 1 hour to the next what's happening. So this one would be from 9 until 10. This one would be from 10 until 11. This will be 11 to 12, and it basically shows you what the direction is. So, you know, from this hour to this hour, it's a little bearish. This hour to this hour, we're a little bullish. So it just shows hourly mid. Then everybody knows what the gray is, right? That's our 15-minute opening range. And a lot of times that will tell you if we spend a lot of time within that range, that tells you that we're having what Tom Sosnoff calls an inside day, or what oh heck, the dude at Theo Trade would call a range day. What's his name, man?
Don Kaufman.
Not Don Kaufman, the other dude. Hold on a minute.
Corey.
Corey. There you go. Stacy said Corey. Yeah. So that's what he would call this, right? So got cash open, overnight low, and then I've just got some pivot points in there. And I really don't pay a lot of attention to pivot points, but there's a couple in there, and we kind of watch those. So I don't know. Everybody's got this chart too, right? So you've got this, you've got the profile. And has everybody set up your free little account over at TradingView? Free account, just do linear regression, right? Just the regular, you type in linear regression, it just gives you the regular linear regression. And I think I've got the 50 and 200 moving averages. Remember when everybody said, oh, it's the death cross. Oh God. And then everybody's like, really? Well, that didn't, and then whoosh, right? That's the death cross right there, where the 50 crosses below the 200. And then make sure that you put it has, I think it automatically comes with the volume on it. But this has been one of the greatest things, y'all. Watch. The intensity of the move. Look at the red candles compared to the green candles. This is where you really see this is a false breakout. Because volume has done what? Volume has decreased as price has increased. We call this a divergence. Volume decreases, price increases, divergence, which told us clearly that this was going to happen. Did we trust it? No, do we? A lot of times I don't. But I think, yeah, Carlos says he can't live without TradingView. It's his most precious tool to trade. Exactly. Good, Carlos. It's a great little tool, right? All right, any other questions? It's been a great session.
No, thank you, but I do have a comment about the TradingView thing. They have more than just what you've shown. It is probably, I pay for it. I get the Pro Plus.
Yeah.
And it's because I can save charts. So I have different charts with different indicators on there. I've been using linear regression for years, but I'm a Andrews Pitchfork guy. And then when I look at my Andrews Pitchforks and then I look at the linear regression, they're often so correlated that to me, the linear regression is the poor man's pitchfork. And as you pointed out numerous times, you see it's uncanny how it nails pivots, it's staying in the channel. And I know you've said it, but I want to emphasize it to people. The study of volume is very important. The divergence and convergence with volume and price is very telling. And Bobby is emphasizing it. Probably not enough. That's how important it is. It's really terrific. And everything he said here is gold about what he's screening.
Thanks, Ken. Yeah, you're bringing up some great points. Yeah, I mean, if we were just looking at this chart, right? If we were just here, I mean, so you look at this and go, what's the market going to do? Well, y'all were too close. We're too close. This is a 2-minute chart. We're too close to see what's happening. So when we come over here, watch this. This is like 1,000-foot view, right? So we're backing up and going, oh, now I see it. And probably every now and then we probably need to go, hey, let's go to instead of a day, go to a week, right? Start looking at the weekly. Oh, wow, behave. So you see, you zoom out even more and go, man, we ran this big bull. Oh, now what's happening? We are.
About that, it's very, very, very important to get your perspective right. One of my mentors from 20, 30 years ago, Ken Turkin, he's now dead. If you find anything about him, eat it up, Ken Turkin. But he always said, you need to do whatever time frame you're in. You need to go up 3 and down 1. For instance, if you trade daily bars, you go down to the hourly, daily, weekly, monthly. You need that for perspective because things look like I use 4-minute bars, and I'll tell you what, 4-minute bars is like putting a microscope on your nose. It looks like the moon. It's just telling you a big fat lie. You got to look at the big picture. And this weekly just looks pretty sick, doesn't it, Bobby?
It does. It looks very sick, very sick. And fortunately, we scroll out to this daily, and you look at this daily and you go, wow, I don't see why everybody's not seeing that, hey, we got a lot farther down to go. Everybody's like, buy the dip, and they were doing it here, right? Buy the dip, and boy, didn't that look good. But you and I knew, hey, we're not finished yet. And I'm telling you, when my wife can't find tampons, and when I'm buying hamburger and French fries rather than the Happy Meal because I don't want to get the toy, something's wrong, right? Because it wasn't anything for us to eat out 7-8 times a week. I'm serious, and now prices are so sharp. I'm like, I am not paid to do that. I mean, could we pay to go out that many times? Yeah, but I'm not doing it. I'm just not. So we're staying at home. We're doing a lot, of hey, going to libraries, doing doing those type of things. And I know Americans. Here's what Americans are doing right now. Y'all know what they're doing. They hadn't slowed down any. Now some people have. I don't know. Maybe y'all have. But what they're doing is they don't realize it yet, but they're spending more on the credit card, and they've not yet realized that this inflation that we are facing is here to stay for some time. This is not something that's going to be corrected in 3 months.
I listened to that. That's actually quite true. The other day I was reading where the people from the Fed, not the Fed chairmen, but some people from the Fed were promising the public, will promise you this recession will be over in a month. Okay. When only way that can happen is if they fudge the numbers and they just turn those printing press on, and that'll just destroy our currency. And inflation is we're going to go out of control because these people who run this stuff, they're just pumping money in. Like it's almost as if it's a dying effort. You know, someone's got arterial hemorrhaging and nobody's putting a tourniquet on, and they just keep putting blood in and in and in and in. And sooner or later, just can't do it, can't sustain it. We're in deep trouble, folks. That's not a lie.
Yeah, and so that's why with my family is I'm not just looking at this week and go, oh, we're not going to eat out 8 times this week because it's high. I'm looking at, hey, the reason we're not eating out 8 times this week is because it's going to be worse next week. It's probably going to be worse the week after next and the week after next. So I'm looking forward, right? I'm forward thinking. I'm like, circle the wagons now, take corrective measures now with your household finances, with what we're doing in the markets. Just everybody be careful. Everybody be careful.
New debt.
It's a dangerous time. Dangerous time. Yeah, no more debt, right? We got the new minivan. Did we buy a 2022 minivan? No, we bought a 2020 minivan that we could pay cash for, so we don't have a car payment. So when people realize, hey, I'm gonna go out and buy the greatest new car, well, guess what? Rates are going up. So you're gonna be paying more for that. And then God bless the people that are on adjustable rate mortgages. When that mortgage payment starts going up a few $100s a month, and next thing you know, we got foreclosures, we got people defaulting on cars, we got a real estate crisis now, that may could start up. We've got, you're gonna see a lot more repossessed automobiles. This automobile market is out of control. Now, my sister, she buys new vehicles. I don't want to take the depreciation on them, so I buy used vehicles. There are wait times, y'all. And guess what? The dealers are charging above the MSRP, the manufacturer's suggested retail price. That's about to stop. And the reason it's about to stop is because these interest rates are going up. No longer will you be able to buy a car, 0% or 1%. Those days are about to be gone. And they should have been gone a long time ago. And the reason we're in the position that we are is because of the antiquated Federal Reserve. That should be done away with. Rates should be established by market forces of supply.
I got one more comment, then I'm gonna shut up.
Yeah.
Most of the people here, I'm just guessing, are young people. Honest folks, you have not lived through a bear market. Most people out there at the Robinhood world, you go over YouTube and it's all you got to do with these strategies and this and that. None of those people have lived through a real depression or a real recession. But and I'm not saying I'm an expert, but like I was through 87 and the Y2K crash and 2008 and the COVID crash were the last two. And I imagine a lot of y'all were trading in 2008. As these things are kind of rare, and almost all the strategies are biased towards bull. And there's a lot of good reasons. It seems bullish forever. And as long as they're printing money in the printing press, there will always be inherent in the system a bullish bias. And it's because of interest. Interest, when we charge interest on things, be it debt or like the future value of an option, it's got a bullish bias. It's built into the mathematics. And since we do quant trading here, we're stuck on that slope. So it makes it hard to look at a chart sometimes and see, are we in the down market? Is the cycle down for right now? Sometimes the cycle is down, but it looks like we're going sideways, or even looks like we're going up a little bit. And that's because of this bullish bias that's built into our monetary system. So don't be fooled. Be very careful. And Just look at those charts from like 1987. I remember the day of that crash. There was a major hedge fund shut down, had a margin call in the billions. Shut them down, billions, because that guy, they went short puts. They went short puts. In those days, it was the OEX. They were short the OEX puts. And when that market crashed, there was nothing they could do. The exchange covered everybody's debt, took the guy's membership away, kicked him out, and he's still out of Wall Street because he hasn't paid back the billions. And it's just, that can happen, and it's a mess. So y'all be careful out there.
Yeah, very good, very good. Yeah, everybody be careful. This is not a buy the dip moment. It's just not. And that's what people think. Hey, this is probably it. We're probably at the lows. We're nowhere near. Just nowhere near. All right, guys. Happy Father's Day to all you dads out there. Enjoy time with your family, and I will see y'all